This might be one of those videos where we put some things on the desk, but we don't really talk about them. We're going to see how far we can go without mentioning that coin right there. Well, without mentioning that coin a second time, because I guess I just did. So it looks like I just made 5 videos in a row about negative price movement for gold. Some of those were about what might be coming. Some of those were about what was actually happening. Either way, I'm not here to make another one today. I think we've covered it. If we just get down to what those videos are about, though, I'm not looking to judge anything. I'm just looking at trend. I'm looking at likely price direction. I'm commenting on timing because that affects my own buying. And I'm also adding a few thoughts in there on wider performance because, look, I remember what it was like when I was new to buying gold. I would buy something, and then the very next day, the price would drop. Next week, it would drop further. And I'd focus too much on it. I'd get too caught up in that. Now, 5 videos in a row on dropping prices. Maybe it seems like I'm focusing on that again, but if you've been here for a while, you'll already know that I have things a bit upside down when it comes to price. I like the dips. I like the lulls in time when the crowds aren't lining up to buy, because that's where the discounts are. I try to buy on the way down. So if market sentiment is negative overall, well, my personal sentiment is not. Now, let me get some examples out. Right now, you can buy an ounce of gold for less than $2,000. Spot price is hanging out just under $1,900. So there are 2 ways to look at this. One is that prices are now back to the levels that we were seeing before the Silicon Valley bank collapse. That gain is gone, and a lot of people bought on that news. They were buying on the way up, buying on that run in price. So there's a certain sentiment to that kind of situation where you bought when you thought that it was a great time to be buying because everybody else was, and now the prices have dropped. And if I was new, that's probably when I would have been buying too. The other way to look at this is just that, hey, the retail cost of gold is now back below $2,000 again. Not really analyze it much further than that. Now, I watch prices pretty closely and I buy at specific points, but the amount that I save watching those intraday prices versus how I might do if I just set some simple price ceilings and then just bought when it was convenient, well, that difference is pretty small. There are diminishing returns, and those significant swings we're seeing right now are usually just a percentage or two. For a 1 ounce standard bullion coin, 7% premium, that's probably the highest I'll go. And usually it's more like 5%. For a 1/4 ounce coin, which just happens to be the other size I would typically buy, that's more like 13%. I guess I'm shooting for 9%, probably somewhere in between. I have all those numbers in my head, but the most important number is still just the total and the left digit of the total. The total price for me needs to be less than $2,000. That's been the ceiling I've been using for a while. So that's not dogma. That's not advice that everybody needs to lock onto. It's just an easy line in the sand that I have letting me know that gold price is normal. If it's below $2,000, it seems normal. When the left digit's a 2, though, when a single 1 ounce coin costs more than $2,000, well, I need a good reason to buy it. Either the price is clearly on the upswing or there's something special about that particular coin, like that 2023 American Liberty there that I've been ignoring. We'll come back to that one. Let's get some specific examples up. A price right now. SD Bullion, they have 1 ounce Britannias for $1,983. That's 4.5% premium. Now, people say dealers increase their premiums on drops, and they kind of villainize that practice, but it's really just business. If you buy inventory when spot is at $19.40 and then spot price drops to $18.90, well, you're down 2.5% on that particular piece. And it's going to happen to a certain extent, but 4.5% premium is still pretty low. And like I mentioned earlier, the important number to me is still the $2,000, that 2 mark. Now, they have maples below that too. They probably have a lot of others. I just looked at a few. These are some quick examples to show that you don't have to work at finding those prices or buy something you don't really like. It shows that right now you can buy when it's convenient. SD Bullion has 1/4 ounce Britannias for $528. It's right around 11% premium. Maybe it's 11.5. Total price on that coin, $528. Well, I don't really have a line in the sand for fractional. I've been buying them less because I want it to be $500 for a 1/4. I have that in my head. It's just not happening. And it hasn't happened in a while. So I'm not waiting around for any particular price with 1/4 ounce coins. I'm buying more when it's convenient to me, and then I'm just trying to get them I guess, as close to $500 as I can. A quick note on SD Bullion, since I'm showing their site. They're a channel sponsor here, and to be fully transparent, they're in a really good spot on the good, fast, and cheap grid. You'll find dealers out there who'll probably beat them in any one category, but not all three, at least not in my experience. They were one of the few that I was already using prior to them sponsoring the channel, so they're a great choice, but I don't want to be weird about this. There are other options. The reason I'm bringing up the bargain side of this whole thing is that right now is a much better time to be buying than earlier in the year when people were yelling to get your money out of the banks and buy up all the gold and silver you could. I don't even think of it as a contrarian strategy at this point, that buying only when others are selling. I just think of it as practical planning. I don't pay a demand tax if I can avoid it. And then more importantly, I don't think of these pullbacks as losing value. I flip it so that I'm taking advantage of those drops. So the upside of buying when prices are dropping, it's pretty clear. Holding below certain buying limits, pretty smart. What about buying when you can't pick the timing? There's an example right here. I'm going to use the high relief Liberty as an example of crossing a line for something special. This one had a 50% premium. That's a 5-0. So it's a 2023 American Liberty high relief gold coin for being official. This year, the US Mint, they went with a bristlecone pine that represents liberty and perseverance. Particular tree is one of the oldest living organisms on Earth. That part's pretty cool. The special part of this coin, though, is that these coins appreciate on the secondary collector market. They're also just a really good example of what the mint can do for these special releases. So in a case like this, where the coin isn't standard and it's clearly going to sell out, there's a mintage of $12,500. Well, I will jump over that $2,000 line in the sand. This particular coin was $2,865. Crazy, I know, but I'm sure that'll come back. It'll probably appreciate pretty quickly. The part I'm leaving out, though, is that this coin has a very noticeable defect. Not a curious error that could make it more valuable, just garden variety poor craftsmanship. Now, I'm not going to get into it here. I have a sample size of 1. Actually, I've talked to a few people who have similar issues, but I will link to a short video showing the issue. And just let you know that I've ordered a second coin. I'll hold tight. I'll count 10 before I say much more than that. Now, special release coins aside, I'd say there's some pretty solid bargains out there. And there actually are a few more special releases coming that hopefully will follow along with spot price. And the timing might actually line up on those. Now, we could see the prices continue to go down. But my thought on this whole thing is that nobody can predict bottoms. So I try to buy on the drops. If price drops more, then I continue to buy, as long as it's convenient. I mean, at some point the money dries up, but the only thing that you can plan on is buying on the way down rather than up. We can see prices dropping and we can see prices rising only after the fact. I try to catch the downward momentum because that's the direction that gives the discounts. So the big takeaway here is that we're safely in that sub $2,000 range again. It doesn't get more basic than that. So I think we can call it good there. Let us know if you're operating on similar price ceilings, whether it's $2,000 all in, whether it's lower than that. Whatever it is, it's going to be better than waiting for some guy to tell you that he heard a bank is about to go under. Or worse yet, a bank actually goes under and prices shoot up and you're on the wrong side of the curve. Either way, though, let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.